Good morning, ladies and gentlemen. My name is Simon Taylor, and welcome to episode 94 of the FinTech Insider Breakfast Show. As you know, in the show, we bring you the best and brightest from around the fintech and banking landscape every single weekday, straight to your homes at 8:30 British Summer Time, apart from on Wednesdays, when our good old Sam Moore goes live at 3:30 British Summer Time or 10:30 a.m. on the East Coast for our US friends. Both shows go live here on LinkedIn. Today, I'm thrilled to be joined by our very own Melissa Stringer, who's 11FS Lead Product Manager in Consulting. Today, we're going to talk about banking as a service. What is it? How does it benefit the industry? And what developments are currently happening? So, good morning, Mel. How's it going?
Hello, I'm good. How are you? How's your weekend?
Yeah, not too bad. Still one Pepsi Max in, so I'm just getting started, just getting warmed up. But I hope our audience is having a good morning as well. Do remember to leave us your questions in the sidebar. Any questions about bank as a service? Throw them at Mel, and we'll be happy to take those on. So hope you're well this morning, everybody, and let's get started. So before we get into bank as a service, Mel, we've not had you on the show before. Tell us a little bit about you and what you do at 11FS. How did you find your way here, etc.?
Thanks. Well, I'm honoured to be here, obviously. And I work in the consulting team at 11FS. So I get to work with all of our wonderful clients on shaping their product visions and designing, building and launching and scaling their businesses. My background is a mix of FX and payments on the institutional and retail side, and also a mix of banking, startups and consulting. So a mixed bag. And actually, I worked on a consulting project with Ryan Garner a while ago, and that's how I came to know 11FS, completely fell in love with you guys and wanted to be a part of the team. So very delighted that you let me in the club.
The job father himself, Mr. Ryan Garner,
exactly.
And all things jobs to be done, is definitely something to be said for. Once you've experienced that, it's a bit life-changing, isn't it?
Mm-hmm.
Let's talk about bank as a service. Can you give us the definition of bank as a service? Because I think people throw around the jargon quite a bit. Is there a neat, tight definition out there?
Yeah, there is. I think actually you came up with it, so I will try not to follow my words. So banking as a service is the provision of complete banking processes as a service using an existing licensed bank secure and regulated infrastructure with modern API-driven platforms.
To be fair, that was actually Benjamin Enser's.
We just
organised it on the detail. But what I think about that definition is, whilst it's technically correct, actually, is there a way to break this down? Because modern API processors using regulated infrastructure, it's jargony. Like, what are the component pieces of it?
Yeah, so there are three components, I guess, or major participant types, and they would be brands, providers, and license holders. So a brand is any company wishing to embed their financial services into the customer experience. A provider would offer any kind of modular financial capabilities to brands to embed. For example, payment services, compliance services, or could be even the user interface itself. And so this really enables brands to create a best-in-class flexible offering. And then the final component is obviously the license holders themselves. So they would partner with the providers and give access to underlying rails and financial products.
So can you give me an example of a brand that is using bank as a service or something along those lines to provide financial services that is a bank or isn't a bank, or what that looks like? Who comes to mind immediately?
Yeah, so for me, I think Apple comes to mind. They've got this interesting partnership with Goldman Sachs, and they're super big in the US. I do wish they would hurry up and somehow get to the UK, but yeah, it's they're a good example. But there are many others as well.
The Apple card's an interesting one, because in that one you've got Goldman are playing the role of both the license holder and the provider. And I think in one of their annual reports, they said they intend to do bank as a service, much like Galileo or Synapse or any of those guys do, but in a broader way. That's super exciting that Apple are thinking about doing that. But I guess you've hit upon something there, which is, why is it in the US only? Why hasn't it gone elsewhere? I guess there's only so much you can do in one country at one time, and the infrastructure looks different in different countries. Have you experienced that? I guess with an FX background, not every country's infrastructure is the same.
Yeah, I have. And, I think that the geographic constraints, as you say, is a big thing. With FX, obviously, being global and being able to send payments overseas and to extend your currency services is, can be a big challenge. And for years and years now, we've had the ability to have like Nostro accounts in different countries and so forth. So I think actually, in some ways, the FX industry is quite progressive in that respect, but it's now technology companies that are embedding financial services to reduce friction and to delight their customers. And I think the US is doing particularly well in that respect.
Yeah, there's a few benefits then of bank as a service, because like historically we always talked about white label, but why wouldn't, so you probably had an airline card with air miles on it and those sorts of things. Is there a benefit of taking this capability and working directly with the bank as a service provider rather than just white labeling a bank's offering? Are there main benefits as that bank as a service thing?
Yeah, there are. I think, well, anybody who's gone through the process of selling or adopting or trying to do any kind of partnership that involves a white label will know that the sales cycle is super long. It's very expensive and takes a long time. And then you're sort of stuck to an extent. So you have to like really marry the partner that you partnered with in the first place. And I think bank as a service allows people to firstly try before they buy, because there is some kind of common language that's used, lots of developer documentation, and even the business models themselves are changing to an extent. So we have the software as a service and pay as you go and subscription models, whereas before it was margin based predominantly.
I think that's super interesting. Right? Imagine having to, you've never really met or worked with this provider before, but then you've got to sign a 5-year deal with them. You're going to spend months and months doing that due diligence.
Oh, exactly.
That's a really interesting point you make, versus like, if I want to work with many of these new providers, I can just have a play. I can just go onto the web and I don't have to sign a piece of paper. That's really disruptive, actually, isn't it? And I guess they're selling to a slightly different audience as well.
Yeah, I think so. And, there are network effects that come into play there. So it's really attractive to brands to do this. And I think for businesses or for banks in general, it allows them to focus on increasing their balance sheet without the huge expense of attracting individuals and potentially having a less desirable user interface. They don't really have to worry about marketing and distribution in the same way as they did before, because the brands already have that, and that's like their bread and butter.
That's super interesting. So what you're saying in essence is there's a lot of cost in marketing and distribution. There's a lot of benefit to it. It potentially attracts deposits, but what if somebody else carried that cost whilst you just sort of had the profitable bit of the pie? You can have other people distribute your balance sheet effectively. That's a really, really interesting strategy idea to sort of play with. I guess so. Bank as a service, if you're a small company versus a very, very big company, it looks quite different. So what if you're a non-bank financial brand? Why would you look at this? Because if you're doing all that marketing distribution, what are your benefits if somebody else is attracting the deposits?
Well, I think if you're a non-bank financial brand, it allows you to think about fintech and different partners in a more flexible way. So what we want to encourage is innovation rather than everybody doing the same thing. So if you're doing something particularly well and it resonates with other financial service providers or indeed big brands, then you get to embed your products in their services, so you can extend your client base effectively, again, in much the same way that the banks would do, without necessarily having the overhead of having to acquire customers. And it's better for the individual customers as well, because it means that innovation happens a lot more rapidly, and the whole market can be more responsive to consumer demand as well.
It's interesting, for the last sort of 20 years or so, banks' IT costs have been going up and up and up. And that's just been to provide a slightly better customer experience. And the output of the challenger banks and the neobanks was that you end up with the high street banks that are sort of almost, are copying features and are almost as good in terms of the front end, but the cost of doing so is a lot more. Yeah. This is potentially a different strategy, which is to say, let those challengers and let the other brands run the UX, and don't worry so much about that, and focus on being a balance sheet. And do you think that's quite a crazy idea in some ways, but maybe it works? Maybe it's going to take off. We are about halfway through this interview, so if you are watching, please do send us your questions. Ask us anything you want to know about Banks as a Service, anything you've seen, any of the providers, any of the brands, anything about embedded finance. Throw it at us, and we'd love to take that on. Mel, when it comes to sort of the financial institutions side, we hear a lot about open banking and Banks as a Service, and those terms sound similar. Is there a major difference between the two?
I think that, going back to the whole geography thing, I mean, open banking was a piece of legislation that came into the UK and EU in order to I guess, allow third parties to access your financial information, obviously with your permission. So it's an enabler, really, to Bank as a Service, rather than being something entirely different. But it goes back to that common language from regulation side and the technology side as well. It's an even playing field, and I think it just generates trust. It generates an impetus for the regulator to say yes as well. So, the whole point of open banking is to encourage innovation.
Yeah, I think there's something about that, like, difference in landscape you now see yourself with, because in the US you've got Plaid, who sort of gives you open banking, but through the private sector. But the problem with Plaid is you're getting 50% of the time the connectivity might break, or something will go wrong, because the banks really don't want to be involved in that. Whereas in the UK and much of Europe, you've got this regulatory assured access to the underlying account data. There's a question that's coming from Scott Richards, who says, thank you very much, Mel. Very interesting discussion. Payments and transaction execution seems to be an element of financial services that customers only notice when something goes wrong, which puts it much more in the utility category than the wow your customer category. So how do providers of Bank as a Service, how do we envision providers of Bank as a Service in the future? Is it a lucrative market to be a service provider, or is it commoditized, high competition, low returns?
Yeah, I mean, it's an excellent point. I do think it is high competition, and I know what you mean about, us being upset when things go wrong. But I think it's more obvious that the delight that customers have is more obvious on the retail side, less so obvious on the institutional and business side. So think about, even purchasing something online, or, I do my grocery shopping on Amazon, for example, which a few years ago would have been completely bonkers. And I pay through PayPal, which is then linked to my favorite, my favorite account with Monzo, obviously. And so I think that this flexibility and personalization is really what's exciting about payment innovation. But I do think that needs to happen on the institutional side as well. And I think that side of the market is a lot more antiquated. There's lots of opportunity that could be had. I do think that there is some interesting stuff happening with respect to distributed ledgers and, that sort of thing.
Interesting. That you mentioned a really interesting company there, PayPal. If you look at the market cap and the price of PayPal shares over the past 2 decades versus the banks, actually being in that space, I mean, you could argue they're a front end to the payments and there's a user experience, but even Visa and MasterCard's share prices compared to the banks has done extremely well. So actually by being sort of these rails and being able to scale them, if you are able to do that commoditized bit really well, potentially your margins can even go up. Payments is a really lucrative place to be at the moment if you're getting it right and if you're getting the volume. I look at Stripe and others. So if you can get the platform piece right, then you're in a really good place. But it's always sort of how do you see the market, sort of rails, capabilities, financial products, and then you start getting into these services bit where you get the new players, the challenger banks, but also the specialists like Chip and Yolt and Snoop and all of those sorts of players. And then above that, you've got big techs. So there's value in the ecosystem piece, there's value in the platform piece, and it feels like the banks are in the middle of the balance sheet being squeezed. And that market's really, really interesting to watch. A good question from James Dykes, who asks, do you think that Bank as a Service will allow players within the ecosystem to focus on their core offerings? And how do you see Bank as a Service enabling open finance and data moving forward? So let's start with this first question. Will it allow people to focus on their core offering?
Yeah, I think so. Absolutely. And I think that having a really pure product, really something that you do really, really well allows you to actually attain clients that otherwise you may not have been able to. And we don't necessarily have the same situation as we did 10 years ago, where big brands or big financial institutions would only partner with other big financial institutions. I think because of things like open banking, and because of the fact that we all have to partner with each other using secure and open APIs, I think that permits smaller fintech companies potentially to win massive whales, actually, if they come up with something particularly innovative.
Exciting, isn't it? The provider space for those organizations. So if you're a specialist in compliance or fraud prevention as a fintech, you can sell to a bank, but a bank may be really, really good at running a balance sheet, maybe really good at scale, but actually does it have the best fraud management software in the world, or should it partner with somebody else who's great at that? Is it the best at producing APIs for payments in the world, or should it partner with somebody who's best at that? So James, I think you've hit the nail on the head. There's something interesting about being able to focus on that offering, and there's something interesting about brands who can bring almost a zero marginal cost of acquisition, or CAC, to bringing customers in, versus the high street banks that pay nearly £150-200 to acquire every customer, but then ultimately make their money back on holding the deposits. Now, imagine if I said to you there was a technology that allows you to acquire customers for zero marginal cost. All it means is giving up some of your brand. That's an interesting debate, because banks are so wedded to their brand and the high street and the logo. So really tough questions. Question from Needy. Needy says, could we elucidate more on the difference between white label versus bank as a service? Some more thoughts on that one, Mel? How do you think about the difference?
Yeah, so I think bank as a service is fundamentally a lot more flexible, and I think this product can, the ability to configure products and to embed things into a brand's own experience is fundamentally the difference. So with white labeling, there is a degree of customization that can be done on top of whatever those core capabilities are, but you typically have maybe one or two big white label providers to power your thing that you're selling to customers. Whereas with Bank of a Service, you can have many different partners and you can swap them in and out more easily, and you're less wedded, it's less rigid, and it's less expensive as well. If you make a mistake with a white label provider, it's incredibly difficult to unpick that.
I think that's a really great point. You're really not getting to be able to customize the underlying bank's offering much. So arguably, if let's pick a car company, Ford, General Motors, whoever, or an airline, pick your favorite airline. Airline takes card from bank. Airline gets their logo, so British Airways or Virgin's logo is on the credit card. You might get some air miles with it, but ultimately the app is the app provided by the underlying bank with the airline's logo on it, and all of the service is the service from the bank. Whereas actually in Bank as a Service, you can pick and choose all of those individual Lego bricks yourselves and recombine them in any way you want. And the flexibility that gives the brand is really quite significant. I think your point about costs of change is really, really important as well. Question from Amit Sen, and there's loads of questions coming in. We will try and get to as many of your questions as we can. Thank you so much for all the questions today. This is one of the most active Q&As I've seen in quite some time. I'm literally struggling to keep up with them, guys, so keep them coming in, and I'll try and get to as many as we can. Question from Amit. Amit asks, what do you think will be the key drivers from major high street banks to adopt bank as a service?
Well, I mean, in the US, there are some quite surprising partnerships with some smaller, older banks that are, as we covered before, extending their licensee capabilities to other providers in the stack. And I think potentially the same thing could happen with the UK banks as well. And actually, there's a lot of underlying concern and narrative in fintech discussions around the ability of high street banks, particularly in the UK, to keep up with the rate of innovation and pace. And I think that this whole change of business model and bank as a service stack, and the way that it is so configurable, and taking inspiration from the US, I think it's almost like a Hail Mary, really, for the UK retail banks. There's this world of possibility that's open to them as well.
It's interesting. If somebody said to you as a high street bank, I'm going to help massively reduce your IT cost, I'm going to bring customers to you at zero marginal cost of acquisition, and you still get all of the data and you get to lend to them, that'd be a pretty great business case. Until somebody says you've got to be able to put your brand in the background. And I think this is where Marcus by Goldman have really got it right with the Apple partnership, is they don't care. They've realized that Apple's brand is probably better than the Goldman brand, and they'd much rather have that zero marginal cost of acquisition. So I think that would be a major driver. But I don't know if the banks are ready for that strategy conversation yet, as they're thinking, what do they need to do with digital to deal with the fact that branches are going away? And actually, bank as a service could be a huge piece of it. But also, they've got to get around the not invented here syndrome. They're very wedded to their systems. And for their IT teams, their systems are the power. And all of the customer data sits on those systems. So why would I open those up? Because I'm potentially threatened by these providers. That means jobs. So you've got to think about those internal politics. So I think the cost of acquisition and the balance sheet piece is really key, Amit. So I'm going to try and get to some other questions. There's a question here from Sundar. I'm not going to try and say your whole name, Sundar, because you've got a lot of vowels, and I do apologize. But how are regulatory concerns overcoming bank as a service? Traditionally, it was the onus of the license holders to get regulators, but bank as a service has sort of changed that. So what does the brand have to do, and what do the providers have to do? We're seeing a real mixed bag there, aren't we, Mel? I guess there's not one answer.
No, there isn't. I think it depends on it depends on different geographies. So, for example, I was working for a client in Singapore quite recently, and I was absolutely amazed at how much market penetration companies like Grab have in the local market, and probably even more so than in the UK. They just seem to be absolutely everywhere, and they're integrated into travel and food and personal finance management, all of this sort of stuff. And it's just incredible how much freedom they've managed to attain through bank as a service. And I think we're sort of seeing the same thing in the UK as well. And obviously, we're using open banking as a means to protect customers and also participants in that chain as well.
There's real lessons to be learned from Southeast Asia broadly, and all of Asia Pacific, India especially, and many of the markets. India, in terms of how it's made its entire banking and identity stack a public utility, and Southeast Asia in terms of how these super apps have really created ecosystems of these underlying services. That ecosystem space becomes really, really interesting when you've got underlying platforms that can kind of enable it. So a couple more questions. We're very pushed for time, so I'll try and get to the last few here, but I think they're still coming in. time. You guys rock. Thank you so much. So Smitha asks, what do you think will really drive the widespread bank as a service offerings wider than retail banking and payments, and how will this impact the cost of the underlying operations of banks?
Well, I think the driver is from the customer side, and I think that the greater degrees of personalization, we're also seeing trends in things like wealth management, people being a little bit more or trying to educate themselves a bit more, demanding parity with interesting things happening in different geographies as well. So something will happen in the US and the next day in the UK, we want it immediately. And so I think that sort of demand drives innovation. It's also helpful for smaller companies, startups to get funding as well, because I think demand awareness and shared responsibility to move things forward in different geographies like ripples out and gives investors confidence as well.
I really like that point about wealth. If anybody's watching and you want to open a new tab, check out a company called Alpaca.markets. And Alpaca is basically trying to build Stripe, but for the investing. So if you wanted to build Robinhood, you could build it on this set of APIs, and there'll probably be many others like that start to emerge. And I do think the platformification of underlying infrastructure across all of the verticals of financial services is a matter of time. And I do think as a result, we'll see a lot more people entering the market doing those sorts of things, which kind of speaks to Adam Amos's point here, which is, does that mean that the value of consumer-facing fintechs will slow because more people can produce bank as a service? Everybody has access to these tools. Do the consumer-facing fintechs decrease in value somehow?
I think it depends on your own strategy as a business and where you want to sit in that BaaS stack. So we've seen examples of people being license holders and brands at the same time. Like potentially Monzo is a good example of that. Starling Bank as well is doing tremendous stuff for businesses, and they've got a whole like Starling marketplace ecosystem happening. So they're the brands to facilitate people accessing providers within the stack. So there's lots of different things that you can do depending on what your strategy is. It's very flexible, I would say.
I do like that kind of flexibility, and that's the key thing here with Bank as a Service. We're coming to the top of the hour. I just want to remind everybody we did write a report all about this stuff. So if you want to check it out, you can go to bit.ly/banking as a service, bit.ly/banking as a service. Do check it out. We go into all of this stuff in depth. We also cover how we think it's a $3.6 trillion opportunity. And my personal pick is embedded lending is going to be the next big area after embedded payments. So keep an eye out for that. So that's all we've got time for. If you are going to be watching the next couple of days, we've got Adam Davis joining, giving his hosting debut. So do check that out. And he's going to be joined by Philip Suak from ViaCash. Mel, thank you so much for joining.
Thank you. It's been such a pleasure.
Everybody, I hope you have a great day, and we shall see you soon. Take care, everybody. Have a good one. bit.ly/banking as a service. Do check it out.